Well, today I was more of a bystander in the market. The CPI came out. The CPI is the Consumer Price Index that tries to measure a broad basket of goods and services, like the prices of those goods, and it kind of gives the market a direction on where inflation is either going either up or down based on how those goods are kind of trending. So if the prices of the goods and the services offered that they are trying to measure, if that price is kind of trending up, that kind of means that inflation is trending up. If the basket of goods and services, if the prices of them together are kind of trending down, that's how they kind of judge that inflation is going down. From the CPI, that's what the Federal Reserve used to kind of judge how they want to go about setting interest rates, whether they want to be more aggressive or they want to be more um, less aggressive or not really push for higher interest rates. So that's basically what happened today in the market. I'm not a big fan of trading news, so today I went with a small share strategy. I still exited with some profit, but I kind of was more of a bystander, as I said at the start of the video, and actually watched and saw places where I could have entered for sure. But exactly why I exited the trade is good because I exited at a pivotal moment in the market. When the market began to go against me, I exited with some profits there, but still, it was a small share strategy, but I was still right nonetheless. But some key takeaways from the CNBC website is that the consumer price index fell 0.1% in December. So when they released the CPI in January, it's kind of more discussing what the previous month's results were. So the CPI, excluding food and energy, which is the core CPI, rose 0.3%. So that rose. However, because of the big drop in the prices of gas, that's what really had the CPI go down in the month of December. So, as you can see here, the CPI fell 0.1% for the month in line with the Dow Jones estimate. That equated to the largest month over month decrease since April 2020, as much of the country was in lockdown to combat COVID. So, this is kind of bullish because the Federal Reserve uses the CPI to judge where they go with interest rates. So, if they might go like softer on interest rates, they might go 0.25 or zero point 0.5 less aggressive because they're not really combating high inflation, and inflation seems to be ticking down, and it kind of found a top around June and March thereabout. So inflation seems to be coming down, which means they might be more accommodative. They might not go as harsh when it comes to interest rates, and this is bullish for the market overall. So I'll show you where I entered my position. I only had one trade today. And as you know, I'm just focusing on just building out the strategy, and then I can deploy more capital to the strategy as I see a lot more consistency. So the only trade today was at 9:32. I went to the sell side. So what I find interesting is that on the dollar here, is that I have my daily support level here, right? And when you go down to the 5 minute, this is when the market began to open. So at 9:20, 9:25 on the 9:30 candle, that's when I could see the dollar was kind of rejecting this support level on the daily, and it started to trend up. From that trend up, from that rejection and that trend up, that's where I entered to the sell side on the QQQ. So I entered at 27760, and let's just draw it out here on the 9 o'clock candle. 27760, 27760. So it wasn't exactly at the market open, like 3 minutes after the market open, but I still got the only or one of the main red moves for the day, which was right at market open. So that's why, even though the news was quite bullish, you could have been trying to trade it based off the news, which is kind of, I would say, gambling. But if you weren't trying to, if you didn't have a way to measure your entry or a signal to enter prior to that, then you would have been wiped out as the market kind of went against you in the first hour of the day. The market went against you, basically contradicting the news, and then it began to rally. So it kind of cleared out everybody who had positions to the buy side based on the positive news. So it's like clear vanilla that yes, this news is good, but based on that, based on the news being good, the market, they can basically wipe out all of your bullish position, put you in a lot of drawdown, and have you really question, am I right? Should I be holding this trade? Because as you can see, from 277, the market kind of went all the way down to 273, and then before trending to the upside. So I entered at 277.60, and then on the 10 o'clock candle is when I closed the trade as it started to kind of go against me. I mean, I could have closed it down here. Honestly, I was trying to go for this daily support level. That's where I really wanted to close it. But as it started to go against me, I decided to just take some profit and run and not hold through it. And I'll show you exactly on the dollar where I saw it start to kind of pivot and flip to the other side. And that's when I was like, okay, it might not be worth it to hold this trade. Let me exit with some profits and I'll go. It's same way if I was trading like with more money, like a larger position. I think that would have been the best way to exit this trade, as it seemed like it was going against me. I would have left with a large sum of money regardless. Like, say I was trading 300 shares, I would have left with $300 there, gone. Just exit. I don't want to wait. It looked like it was going against me. Let me just take the money and run. I live to trade for another day, right? So I exited at 276, 27, 276, 27, 276, 27, 276, 27. Okay, so this is exactly where I exited on the 10 o'clock candle. So as you can see, it really started to go against me. When I was down here, that's when I was up about $14. So I was up around 3 to 1. So I was up 3 times the amount that I was risking. But that's how it goes. I wanted to just ensure that I left it in some profits. And for the week, we've had 3 profitable days, 1 losing day. And then tomorrow, it's more than likely that we're going to have a profitable day. But let me show you at, this is where it really started to go against me. And I'll put the QQQ on the 5 minutes as well, because you can see exactly where it started to kind of pivot. So look at 950 here. So you have 950 is where the QQQ kind of made its lowest bottom. Honestly, if I was looking at the QQQ on the 5 minute, I probably would have spotted the bottom here, but it's kind of hard and you never really know all the time, you know. So at 950, let's go to 950. At 950 is when you had like the last bullish move. 950, so 955. Ah, perfect. So 955 is literally the top of the market here, top of the dollar. And I see at 955 is the bottom of the QQQ. So this is the point where I would have made the max amount of money, and this is the point where I could see the market kind of pivoting. And so you see 955 here, 955 here. So 955 marked the top of the dollar for the day. 955 marked the top of the QQQ for the day. So the thing about this, what I like is that you can, if you understand candlesticks a bit more, you can use that to kind of judge like which one kind of sticks out to you more and use the other as a confluence, right? So during the day, I'm looking at both of these symbols at the same time, and I'm seeing how the candles are being formed on the dollar and also seeing how the candles are being formed on the QQQ. So here is where I exited. I mean, I exited on a red candle, yes, but also I could have done better with an exit down here. However, I was trying to get this entire move, because why enter the trade if you're not trying to get the entire move? However, when it started to go against me, I moved my stop loss into profit, move my stop loss a little bit more, and then at some point I could see that the dollar really pivoted and started to go to the downside. And as you can see, for the rest of the day, the dollar kind of just trended down. As the dollar trended down, you could have probably played the QQQ to the upside right here. So you can see, if the dollar started to trend down, if you entered at 1030, where would that be here? 1030. So say 1030 you enter while you see it kind of pushing down. So 1030 you entered here. Ah, nice. It's sticky. It's sticky. Oh, no. Nice. 1030. If you were to enter on 1030, right, you'd have gotten an entry here. Yes, you might have taken some downside, but at the end of the day, you'd have ended in profit for sure. So 1030, you could have just ride it down, ride all of this bearish momentum on the dollar and take it on the bullish side on the QQQ. So that's what I really liked about today. So looking at the 5-minute chart is kind of giving me a better breakdown of where the market might be pivoting, how strong is the trend, and I really like it, and I love how it's been playing out. So it looks like we're getting a little bit better with the strategy. We have to just stick to the discipline and just keep it. Just keep the discipline. So if I'm trading 20 shares, keep it 20, as that's the way to really understand and prove the strategy. So what I'm really trying to do is more to prove the strategy. I want to see if the strategy works. Is this something that I can employ? Is this something that I can rely on to bring in consistent profits from the market? All in all, it was a good day today. Even though I was out within the first 30 minutes, I mean, I don't mind that at all. That's really what I wanted. I want the market to tell me if I'm right or wrong very quickly, and then from that, I trade the next day. I'm not trying to chase it down for the rest of the day. As the skill set gets better, yes, for sure, I'm going to be able to trade like intraday, maybe. I'm not sure if that's something I'm going to want to do, but when I get very skilled at it, I believe practice practice they say practice makes perfect, right? But I believe practice doesn't necessarily make perfect, but it can actually show you how to recover from your mistakes much easier. So it seems like everybody might not be perfect, but if you do it over and over and over, you know how to correct certain small things that might happen. So it might be a plumber that he like cut some fittings bad or something like that. Him having a lot of experience, he knows the little tricks and the ways to get it perfect to ensure that there are no leaks. So even though they say practice make perfect, you might not get perfect, but you know how to correct your mistakes anytime anything happens that might affect a newbie. So somebody that's new and they come and do some plumbing, and then the fitting might not be working out exactly how they want it. They might do something and just mess it up, or they just don't see how they could correct it very simply. But an experienced plumber might see it and say, oh no, that's simple. You just go and you just try to slice it a little like that. You pop it off, you put on a new fitting, it's good to go. So that's basically it. So it's a lot of practice, and I'm putting in the practice every single day. So I hope you enjoyed this video and found some value from it. And I really want you to take note of it. Look what I'm doing. I'm drawing on the daily and the weekly support levels and resistance levels, and as you can see, the market is messing with these areas somehow. So the market is kind of breaking down from the level. Sometimes it just barely touches it. As you can see, 930, it just touched the level, barely touched the level. Look closely. That's not a level that I just drew. It kind of went through it, but you can see it had some reaction to that level. All right, so these levels offer some form of significance even here. You can see that this level, it didn't touch it, but it came very close to it, and you could use it as a level of resistance, and that's what I did. So that's basically it what happened today. I hope this video provided some value as I said before, and I'll see you in tomorrow's video. Bye bye.